Ever had all your time frames line up perfectly and still lost the trade? You're not alone, and here's what most traders miss.
I just wanted to share a scenario with you that is all too familiar to some of you, and hopefully it's a lesson for those of you who've not made this mistake before. But when I started trading, I really tried my best to get the charts in perfect alignment. We're talking the weeklies going up here, I've got a daily going up here, and I also wanted my third time frame to be perfect. This to me was what time frame correlation was. And when I would get in here, I'd often find that trade wouldn't win. And I'd be looking, thinking, well, this one won, and that one won, and that one won. Why is it the one I got into didn't work? This was me getting in late. Time frame correlation is all about getting in early. Yes, the time frames need to agree, but you need to time your entry better. So it's not about getting the time frames to look perfect. In fact, and as I've said in previous classes and workshops, if all three charts look too perfect, you're probably later into the move. You need to get in when this is downright ugly. I know it sounds weird, but it has to be that way. We're talking about multiple time frame agreement. So an example would be this. Have a look at Australian dollar versus the New Zealand dollar. Yes, I've got direction on my weekly. We've got two clear cycles. You could argue there's more on the daily. And more importantly, we're just trying to get in at the beginning of the phase one here. I'll get rid of that. This into this is the beginning. Now, what does that look like at the beginning? And I encourage you to draw circles, rectangles. Look at how messy that looks. If you notice, we do get signals here. Let's just we'll use a trend line. You get signals here. These signals are not the correct signals. What I want you to do is look for a trade on the break of that trend line. The break of the trend line is the change from phase 2 to phase 1. So every trade after that, early after that, that's the key word. Early. Let's do that for you. So you remember we get in, get rid of that, and we want to get in early after the break of P2 trend line or after the EMA, the 8 and 20 EMA cross. This is something you will see on a regular basis. I'll stick this here for you, just so you have it there. Your entry here does not require 2 cycles. Your entry here is the earliest and best entry you can possibly get into. Look what happens. Early, and once you're in and you've made profit or whatever, even if you've lost, you're welcome to get in again. Don't be afraid to get in again, even if you take a loss, because your direction and your bias is correct. You're bullish, you stick with it until the trend changes. This is the old me. This is where the old me would be taking a brand new trade. This trade is valid because it meets the rules. But if someone hasn't got in here and made some profits, then what's the point of getting in so late into a move that we all know the market could just drop? And already the signs are there on the daily. We're getting a high test today. We don't know what's going to happen, obviously, but I don't want to get in here for the first time. This, as far as I'm concerned, should be your 1, 2, 3, maybe your 4th or 5th entry into this move. Now, for further knowledge on this, get yourself booked in for your coaching, get yourself on our workshops, ask us about time frame agreement, and hopefully this will make more sense to you down the line. I hope this works for you, and I hope you makes sense of this, even a little bit of sense. And if it is, then there'll be growth in the future. I'll speak to you all soon. Happy trading.